When people think about hedge funds, they think about one thing: men. Specifically, men in dark suits, in glass towers, in Manhattan or Mayfair, moving billions of dollars before most people finish their morning coffee. The image is so consistent, so repeated, so deeply burned into the culture of finance that it almost feels like a natural law. Like gravity. Like it was always supposed to be this way. It was not. In 2016, a woman born in Rio de Janeiro, not on Wall Street, not in London, not in any of the cities people associate with money, became the first woman in history to land on the list of the 50 highest-earning hedge fund managers on Earth. She did not have an MBA. She did not come up through Goldman Sachs or JP Morgan in the traditional sense. She had a PhD in engineering. She thought about markets the way scientists think about physics. And in her first year running her own firm, she made $60 million. That is who sits at number one today. But before we get there, understand something. The women on this list did not succeed despite the hedge fund industry. They succeeded by doing something the industry never expected. They were smarter, more disciplined, more willing to go where no one else was looking. And in every case, they were underestimated, every single time. Wait until you see number one. Today, we reveal the 5 richest female hedge fund managers in the world, the fortunes, the strategies, the moments that changed everything. Before we start, if you are new to this channel, Gentle Status is dedicated to tracking real wealth, real empires, real stories. Hit subscribe so you do not miss what comes next. Now, Number 5, Sonia Gardner, the Brooklyn billion-dollar bet. There is a version of this story that starts in a glass office overlooking Central Park. That is not Sonia Gardner's story. Hers starts in Brooklyn, not the Brooklyn of artisan coffee shops and film premieres, but the Brooklyn of hard ceilings, limited networks, and a financial industry that had almost no room for someone who looked like her or came from where she came from. Gardner co-founded Avenue Capital Group with Mark Lazary in 1995. At the time, the firm was barely a footnote, a small operation betting on something most investors treated as financial garbage: distressed securities, bonds and loans that companies could not pay back, debt that banks wanted off their books as fast as possible. Most investors ran from distressed assets the way you run from a burning building. Sonia Gardner and Mark Lazary ran toward the fire. The strategy was simple to describe and brutally difficult to execute. Buy the debt of companies in financial trouble, often for pennies on the dollar. Then either wait for the company to restructure and recover, or use your position as a creditor to influence the outcome directly. It requires iron nerves, deep legal knowledge, and an ability to see value buried under layers of chaos that most analysts never bother to dig through. Avenue grew, quietly, steadily. Then came 2008. The global financial crisis did not destroy Avenue Capital, it supercharged it. While the rest of Wall Street was bleeding and begging for bailouts, Avenue had exactly the kind of expertise the moment demanded. Distressed assets were everywhere. The firm deployed capital with precision when others were paralyzed by fear, and by the time the crisis had passed, Avenue managed north of $10 billion. Sonia Gardner is not the face you see on CNBC. She is not the name that trends on financial Twitter. She built her empire in the background, which, in the hedge fund world, is often exactly where the real money lives. A net worth estimated in the hundreds of millions. A firm that turned chaos into capital for 3 decades. And a founding story that began in Brooklyn, not Boston, not Greenwich, not the Upper East Side. Power does not always announce itself. Number 4. Marcia Page, the Minneapolis Contrarian. Every assumption about where serious money gets made in America points to the same handful of zip codes: Manhattan, Greenwich, Connecticut, San Francisco. The formula is well established: elite university, 2 years at a bank or consulting firm, then a seat at a fund with a name that means something. You move to New York, you join the right clubs, you wear the right shoes, you play the game. Marcia Page did not play that game. In 1993, she co-founded Vade Partners in Minneapolis, Minnesota. Not a satellite office, not a retreat. Minneapolis, the headquarters, the center of gravity, the place where one of the most important alternative credit firms in the world was built from the floor up. 2,000 miles from Wall Street. She had spent years trading distressed and high-yield bonds at Cargill, the agricultural giant, and managing portfolios at EBF and Associates before that. She understood credit not as an abstraction, but as a physical reality, as machinery that either worked or broke down. Varda's model was built around the same principle Avenue Capital understood: distressed and special situation credit. But where others dabbled, Varda went deep. The firm developed expertise across geographies, across asset classes, across the full life cycle of corporate stress and recovery. They were not chasing trends. They were building a permanent machine for finding value where others sought risk. Over 3 decades, Vard grew into a firm managing roughly $14 billion in assets. It attracted institutional investors from across the globe: sovereign wealth funds, pension systems, university endowments, all of them trusting a firm that chose Minneapolis deliberately as its home. Marcia Page eventually stepped into an executive chair role and also founded Empowered Capital, a firm specifically designed to invest in and support female and underrepresented investment managers. She saw her own ascent clearly enough to know exactly where the pipeline was broken. Her net worth is estimated in the hundreds of millions. But the number that matters more is this: 30+ years. One firm, one city that nobody took seriously. And a track record that made the entire industry pay attention. The most dangerous investor is the one no one is watching. But that is not even the most dramatic story on this list. There is a name that appears in the single most audacious creditor trade in modern financial history. A trade that turned $120 million into more than $1 billion. That name is number 2. We will get there. But first, number 3. Karen Finerman, the public face of Quiet Power. Most people who know Karen Finerman know her from television. She has been a regular voice on CNBC's Fast Money for over 15 years. Sharp, precise, direct. She gives opinions on markets in real time, on camera, under lights, while managing a live portfolio. It is a performance that requires a kind of confidence that most people in finance never develop, because most people in finance are terrified of being wrong in public. Karen Finerman has been doing it for decades without flinching. What the television audience often misses is what sits behind the camera. In 1992, Finerman co-founded Metropolitan Capital Advisors, a long-short equity hedge fund based in New York City. She was in her mid-20s, and the firm focused on finding mispriced companies, stocks that the market had either overvalued out of enthusiasm or undervalued out of fear, and positioning accordingly. It is one of the most intellectually demanding strategies in the hedge fund world because it requires being right not just about a company's fundamentals, but about the psychology of every other investor looking at the same stock. Metropolitan Capital has operated quietly and consistently for more than 30 years. It never became a household name among institutional investors the way Bridgewater or Citadel did, but it never had to. Finerman built a firm that served its investors and survived every market cycle the 21st century threw at it. The dot-com collapse, September 11th, the 2008 financial crisis, the pandemic crash of 2020, and everything in between. Or her net worth is estimated in the low hundreds of millions. But Karen Finerman represents something that is harder to quantify than a dollar figure. She is the proof that you can be visible and private at the same time, that the spotlight and the substance can coexist. That 30 years of compounding quietly while the world watches someone else is its own kind of dominance. She never needed to be the loudest voice in the room. She just needed to be right more often than everyone else. We are halfway through this list, and it only gets bigger from here. If this channel is new to you, right now is the time to subscribe. What you are about to see makes everything so far look like a warm-up. Number 2. Nancy Zimmerman, the Argentina assassin. In the spring of 1994, and Nancy Zimmerman and her partner Gabriel Sunshine launched Bracebridge Capital out of Boston with $50 million. That seed money came from 2 sources: Farallon Capital, one of the most respected hedge funds in the world, and Yale University's endowment, managed at the time by David Swensen, the man who essentially invented the modern university endowment model. When David Swenson gives you $50 million to start a hedge fund, the financial world is not ignoring you. The financial world is watching. Zimmerman had earned that attention. She started her career trading currency options at the Chicago Mercantile Exchange while still a student at Brown University. After graduating in 1985, she joined O'Connor and Associates, then moved to Goldman Sachs, where she eventually led the global interest rate options group. She understood fixed income at a molecular level, the structures, the risks, the legal mechanics that most investors never bother to read past the first page. Bracebridge's strategy was absolute return in global fixed income, not chasing stock market returns, not making macro bets on currencies, looking for deeply mispriced opportunities in the corners of the fixed income world that the big banks overlooked, and doing it with such precision that the fund had only 8 losing months from 2009 to 2016. In an industry where most funds struggle to beat the market in a good year, that is a record that sounds almost fictional. But the moment that defined Bracebridge and cemented Nancy Zimmerman as one of the most lethal creditors in modern financial history was Argentina. Through the 1990s and into the 2000s, Argentina accumulated foreign debt it eventually could not pay. In 2001 and 2002, the country defaulted on more than $100 billion, one of the largest sovereign debt defaults in history. Most investors took the restructuring deal Argentina offered and moved on. A small group of hedge funds, Bracebridge among them, did not. They held their ground. They went to court. They argued that Argentina owed them the full value of their bonds, plus interest, under New York law. For years, Argentina called them vultures, financial terrorists. Former President Cristina Fernández de Kirchner attacked them by name. The legal battle dragged on for over a decade. In February 2016, Argentina settled. Bracebridge received a return of 952% on its original position. Though $120 million became $1.1 billion. That is not a trade, that is a statement. Nancy Zimmerman's net worth is estimated by Forbes at approximately $800 million as of 2025. Bracebridge Capital currently manages over $12 billion for Yale, Princeton, and a list of endowments and foundations that reads like a directory of institutional prestige. She also survived a very public controversy in 1997, when her husband's Harvard Research Institute lost federal funding over allegations connected to her Russian investments, and came back from it without once abandoning her strategy. She did not bend, she did not blink, and a sovereign nation eventually wrote her a check for more than $1 billion. Before we reveal number 1, if you have not subscribed yet, do it now, as because the story you are about to hear is exactly why this channel exists. Number 1, Leda Braga, the Queen of Quants. In 2015, a 47-year-old Brazilian woman with a PhD in engineering from Imperial College London launched her own hedge fund out of Geneva, Switzerland. She had spent 14 years building and leading the systematic trading division of Bluecrest Capital Management, one of Europe's most powerful hedge funds. And when she finally left to start her own firm, she took $8.5 billion in assets with her. On day 1, her name is Leda Braga, and she is the most powerful female hedge fund manager in the history of the industry. Braga grew up in Rio de Janeiro. She studied engineering, then went deeper into fluid dynamics, into the mathematics of how complex systems behave. She was a lecturer and researcher at Imperial College before finance found her, or before she found finance. The transition was not accidental. She saw that markets were complex systems, that prices moved in patterns that human beings, with their emotions, their biases, their narratives, could not process cleanly. But computers could. She joined JP Morgan's derivatives research team, then Bluecrest. At Bluecrest, she built the Blue Trend Fund from scratch, a computer-driven, algorithmic, managed futures strategy that averaged over 11% annual returns from 2004 to 2014. The fund did not have opinions. It did not have feelings. It had rules, models, and data. When the models said buy, the fund bought. When the models said sell, the fund sold. Emotion had no seat at the table. By the time Braga left to form Systematica Investments in January 2015, Blue Trend was one of the largest and most successful funds Bluecrest had ever run. The spin-off was not a breakup. It was a graduation. In her first month running Systematica independently, the Blue Trend Fund returned 9.52% net of fees, while most of the hedge fund world was still finding its footing after the Swiss National Bank's surprise currency shock that had burned traders across the globe. Systematica made money, precisely because the algorithms had already accounted for the possibility. In 2016, Leda Braga became the first woman in history to appear on institutional investor Alpha magazine's list of the 50 highest-earning hedge fund managers on Earth. She earned $60 million that year, in her fund's first full year of independent operation, the 44th spot on a list that had been exclusively male for its entire existence. She was not invited to that world. She built a better one. Systematica Investments today operates from offices in Geneva, London, New York, Pasadena, Singapore, and Shanghai. The firm manages multiple strategies: Blue Trend, Blue Matrix, a China markets program, and others, across more than $10 billion in assets. Braga's personal net worth is estimated at approximately $3.5 billion, making her not just the richest female hedge fund manager on Earth, but one of the wealthiest self-made women in the entire financial industry. She does not do many interviews. She does not appear on panels where other people discuss her success. When she does speak, she speaks about data and about process, about what the models are showing. Never about being a woman in a man's world, because from where she sits, the world is made of numbers. And numbers do not care about gender. There is one story she told in an interview that captures everything you need to know about how she thinks. Someone asked her what the secret was to Systematica's success. She paused. Then she said, "I don't know if we are the best at what we do, but we work hard every day trying to be just that." In an industry full of people who are certain they are the best, Leda Braga built a $3.5 billion empire by refusing to stop asking the question. 5 women, 5 different cities, 5 completely different strategies. But look at what connects them, and you see something the hedge fund industry rarely admits. And the women who broke into this world did not succeed by playing by its rules. They succeeded by making the rules irrelevant. Sonia Gardner found the fire others ran from. Marcia built her empire 2,000 miles from where everyone said you had to be. Finerman stayed visible without ever revealing her hand. Zimmerman waited a decade and collected $1.1 billion. And Leda Braga replaced human judgment with mathematics. And the mathematics won. Only 10% of hedge funds globally are led by women. That number has barely moved in 30 years, which means somewhere right now, there is a woman sitting in front of a Bloomberg terminal with a strategy that could outperform everything on this list. And someone somewhere is not taking her call. What does it take for the next Leda Braga to be discovered and not buried? And is there a woman running money right now, quietly, in a city nobody is watching, building the kind of track record that will force the entire industry to rewrite this list in 10 years? If you made it this far, you already know this channel is different. We are just getting started, and the stories coming next will be bigger than anything you saw today. Subscribe to Gentle Status. We are tracking the money.